Today, we are going to explore how real estate tokenization can transform the housing market, and we will discuss significant milestones and current market trends, and how this technology addresses affordable housing challenges for Gen Z and millennials. I want to introduce you our special guest today. So Michael Flight, he is a real estate entrepreneur and tokenization pioneer. Michael is the principal at Concordia Realty Corporation, CEO at Liberty Real Estate Fund, and the CSO for Invest on Main. Dubbed as the godfather of blockchain real estate by Forbes, Michael co-founded Liberty Real Estate, the world's first net lease security token fund, and created the Blockchain Real Estate Summit. And Pascal here, our second speaker and the founder of Portio Capital, has a robust background in venture development and co-living investments. And today he will share Portio Capital's contribution to solving the affordable housing problem and provide updates on the market launch. Pascal will discuss how Portio Marketplace allow you to invest and trade tokens representing shares in co-living projects using blockchain technology. Are you guys ready?
Ready to go.
Yes.
All right. Pascal, you can. Michael.
Sure. Well, thank you everybody for coming. Hello. My name is Michael Flight, coming to you from Chicago area. Appreciate Pascal inviting me. He's got quite a concept here. But first of all, most people say, why real estate? And I like to explain that real estate is probably the best investment anyone can make. And in most of the world, it is the type of investment that everyone wants to make. So everyone needs housing, needs shelter, and all the rest of it. So for that reason, we think that real estate is the best. But the problem is that real estate is very difficult for people to own. It's getting even more difficult, and Pascal will explain to you how he's addressing that, for people to find a place to live. So with that, we can move to the next slide. So just like the internet allows for instantaneous worldwide communications, the amazing fact is that, you know, we are coming from all over the world now. Just reminiscing with Pascal earlier today that I used to have to fly everywhere, and we used to have to mail everything or FedEx something if we needed something there immediately. And now we are just directly talking, which is science fiction when I grew up. But the blockchain allows for instantaneous transfer of money and assets worldwide, so that you know, there was other projects besides Bitcoin, but Bitcoin figured out that you could send something of value to one person, and it would go anywhere in the world to another person. And it was the way that you wouldn't have to go through an intermediary. It's direct to direct. So that's the great thing about blockchain and tokenization. So how does that fit into real estate? Well, what you could potentially do is send a share or, you know, a token of a real estate project as value to somebody else. And you wouldn't need to go through a bank. You wouldn't need to go through a title company. We're not talking about direct ownership of real estate, but, you know, primarily shares of real estate when I talk about tokenization. We can go to the next slide now. So use cases for blockchain and tokenization. And actually, I have to say that Larry Fink, the CEO of BlackRock, stole my line, because I said probably in 2020, a lot of the world's value is going to be tokenized within the next 5 to 7 years. It was a little early in 2020. I think it's going to be correct now. But what is the largest asset class in the world? The largest asset class in the world at $280 trillion is real estate. So crypto and you know, Bitcoin and then Ethereum and then some of the other ones were the first use cases for tokenization. Stable coins now have come into their own so that instead of using PayPal or instead of using MoneyGram or instead of using a bank wire transfer, you can send something directly. And the thing that most people miss, especially Americans, is that they don't understand that in Africa and Latin America, the economies, a lot of them run on stable coins, or you know, there's a predominant, a really nice size thing, because that's how those people can transact outside currencies that are devaluing, you know, in some cases like Turkey and Venezuela, you know, 50 to 100% per year. And then there's NFTs. It was a craze back in, you know, 2020s, 2021. And it's basically an NFT is a non-fungible token. It's tokenizing one of a kind. And where I see personally NFTs being valuable to real estate is putting real estate title on blockchain as an individual NFT. And what we're going to be talking about mostly here today is security tokens, which are shares of, you know, a real estate deal, shares in a venture capital fund, shares of private equities, and most importantly, right now they're tokenizing U.S. Treasury bonds. They're tokenizing other types of bonds, Credit Suisse, no, not Credit Suisse, Bank Paribas, and some of the European banks have been at the forefront of tokenizing bonds. And, you know, eventually all stocks will be traded as tokens, and they'll be traded 24 hours a day, 7 days a week, instead of right now when the individual stock markets or bourses are open. You can go to the next slide. So the great thing about tokenization, and this is why I'm most excited about it for investors, is you control your assets. So earlier this morning, I'm going to say a little bit about Andrea's personal life, but she told me she's a digital nomad, which I'm very excited about. I love the fact that she can go anywhere in the world and work and do stuff, but with, you know, crypto, digital assets, and also primarily what we're talking about here is tokenized assets, is your assets follow you. Your assets are in your own wallet. They're not stuck in a bank someplace else. They're, you know, right with you all the time. So you can receive your cash flow and interest payments directly to your wallet. They don't have to go to your bank in, you know, the Netherlands, and then you have to figure out how to get them wired if you're living in Costa Rica. You can buy real estate and other assets anywhere in the world. This is not the case now, but this is where things are going. So, and I can tell you, when Dennis and I started out in, you know, the game, he was a lot earlier than I was, but there was this idea of doing this, but most people couldn't do it. Now, this year especially, I've seen a flowering of all kinds of tokenization platforms, all kinds of the buzzword today is real world assets. And suddenly crypto has figured out that it needs some stable things in their crypto economy. So I believe that real estate is probably your most stable thing in the world in terms of an investment. No place else do you get the cash flow. No place else do you have the you know, collateral that you can mortgage against and do other things against. And the great thing is you can get access to your money and time any place. So we can go to the next slide. This is security token. A lot of people ask me, what's the difference between a traditional real estate fund, a real estate investment trust, and a tokenized real estate fund? So one of the things that what I've found, because we've always done traditional real estate funds or traditional what they call in the United States syndications, and those paper shares, once you get involved with a deal with a sponsor, you're locked in for 5, sometimes 7 years. on a personal experience that I've had is my father in 1983 invested in a hotel deal, and then he died, subsequently after that. My mother was stuck in this hotel deal until 2020. It never made money. It created all kinds of problems. It created problems at the end, but she couldn't get out of that hotel deal for, close to 40 years. So, and that was a private syndication. With a tokenized real estate fund, theoretically, she could have been able to trade her shares, even if they were traded at a discount, to get something and to get into something that, would have helped her, in her retirement. So that's the great thing. The other thing that we really like is in the United States, you cannot do peer-to-peer trading, but in most other cases in the world, I could trade my shares of something directly with Pascal, and we would just do what's called an atomic swap. So it's the wave of the future, and I've been telling people, and especially I was on a call yesterday with a gentleman that they're doing a lot in Africa, and we're going to start working with them to put together something in Africa. But the great thing I told him is that here and in Eastern Europe, Africa, and Latin America, they can jump the legacy financial system and go right into the new financial system, just like they jumped from landlines. I'm still stuck on landlines, and there's better Wi-Fi and things in Romania and in Latin America than there are here in the United States now. They can just jump to the new financial system and not get stuck in the old legacy. We can go to the next slide now. So what's in it for investors? We talked a little bit about this. Liquidity, you can trade person to person or business to business. Trading is 365 days a year, all day long. The other great thing, which is not available now to private funds, is there's a secondary system. And in the United States especially, right now, all of our funds have to be marketed to accredited investors. So you have to have a certain amount of wealth to even be able to invest in some of these things. But the great thing is that if you issue your shares as a token, after a 1-year lockup period, the SEC allows those tokens to trade to accredited or non-accredited investors, so that non-accredited investors can get into a seasoned project. They can see that there's income, or they can see that it's not performing well, and they can make a decision. But I think that's going to open up the world of private real estate investment in the United States. And the great thing is that I think there's going to be a lot of great real estate projects all over the world opened up to a lot of investors all over the world. Next slide, please. So the other thing is that you can also decide how you can take your money. This is, we've, seen that a lot of people want to take their money in a USD stablecoin instead of getting their money wired directly to a bank. We also now see that there's more. At the time that this was done, which was a year and a half ago, there wasn't a big Euro stablecoin market. Now I see them developing, so I think that's going to be a large thing. And then securities offer the opportunity. You can do it. You can receive your money in euros, yen, and anything that you want, or you can, flip out of them. We can move to the next slide, please. So the other great thing that I really love about what's going to be happening in the new financial system is I forget how many years ago it was, but it was DeFi summer. And nobody knew what DeFi is, which is decentralized finance. But when I talk with investors about what decentralized finance can actually do with your tokens, so let's say somebody invested in one of my shopping center projects, and that shopping center project is kicking off all kinds of cash flow. Or better yet, let's say somebody invested in a co-living fund with Pascal. So, and everything's going great. That co-living fund is kicking off cash flow. That co-living fund is appreciating in value and everything. So they could potentially take one of their shares or all of their shares and lock them in a protocol and borrow against them so they can get actual liquidity without selling their shares. So it really is an exciting time that you can either decide to sell your shares to get liquidity, or if you don't want to sell your shares, you want to keep your shares, you can borrow against your shares. That is almost impossible to do with paper shares. So we can move on to the next one. The other thing that I really like, especially from an estate planning point of view, let's say, for example, that you invested 100,000 euros in the Pascal's co-living fund. And let's say I did it, and I have 2 children. So I want to give each one of my children 30,000 euros each. It's much easier to do it with the token part of it than it is to go through and get approvals in the paper type of situation. So it's much better for estate planning. It's much better for liability planning. And it's also a much easier way to transact. And I like to compare it to when I grew up, it was record albums, and you played the albums on a record player, and that was analog. And then we moved to digital, which was CDs, and now it's all on Spotify, and nobody owns anything. But the great thing about this is you're going from analog, which is the paper part, to the digital part. So it's digital finance. Next slide, please. So basically, it's similar to what Larry Fink had said, and I think he just came out with this either at the end of last year or this year. And he was a great skeptic of anything crypto or blockchain, and now it's going to be tokenization of every financial asset in the world. So next slide, please. It's a little bit about market growth and forecast, and I believe the slides are going to be available, correct? So anyways, we've got significant institutional traction with treasury tokenization. It's been a little bit slower to get real estate tokenization. Number one, most real estate investors are not familiar with opening up a MetaMask wallet, and it has to be a much more Web 2 experience, which is I can go in, I can log into an account, and I don't know that I actually, have the tokens. I just know I have them in an account here. Right now, it's a lot more difficult to do. And for people that are not early adopters, they don't want to have to learn how to do all this stuff. It needs to be just very simple. It needs to be like an iPhone type of an experience where it's intuitive. But the thing is that there's RWAs, which is real world assets, are about right now about 7.5 billion, and the growth is like really going to be huge over the next year. And one of the things that's not even mentioned, or Franklin Templeton just came out with the Benji token, which is US Treasuries. And it's basically like a US Treasury money market that each share is a share in a money market. So it's very cool. So I think we can go to the next one. This kind of shows you where we're at. And we have passed the stage of crypto geeks. We're right now in the difficult to use phase. And we are moving into the green early majority part because it's getting much easier to use right now. but we're still basically in the very early innings of what we like to call, or what the crypto community likes to call, real world assets on chain. I like to call real estate is the original real world asset. And I think that we're just going to see a flood of real estate coming on chain over the next 5 years. And then we are also going to get a flood of new investors. And I'll bring up an example. There's a group out of Florida called Realty, and they primarily specialize in single family homes, in investments. And they've got a great marketplace that primarily attracts French-speaking people. And there's just an active, lively community with people, owning shares of houses and trading shares of houses. And the incredible thing, which, I couldn't have even imagined probably 7 years ago, is one of their deals got close to 2,000 investors in it. But the most amazing thing is they had a $79,000 deal, and it had more than 300 investors in it. So this technology allows a lot more people to own a lot more stable thing, rock solid real estate. Next slide, please. So thank you very much. If you'd like to get more information about me, my website is up there. Also, if you really want to do a deep dive into blockchain real estate, tokenized real estate, I would recommend the Blockchain Real Estate Summit, which is happening September 24th through 26th this year. It's the 4th annual one. We switched it to all online because we discovered that this is really a worldwide phenomenon. So last year we did it for 3 time zones. We're doing it again this year in 3 time zones: Europe, Asia, and the Americas. And we had speakers and participants from more than 40 plus countries. So that just tells you that it's no longer an American and a European financial system. It's a worldwide financial system. Thank you.
Thank you very much, Michael. Now moving on to the next part of the webinar. Pascal, the stage is yours.
Thanks, Michael, for sharing the insights and putting the whole, I would say, tokenization into a larger perspective. I mean, I'm really happy that you were able to join this and to draft or to shed light on, say, what happened in the industry the last 4 to 5 years. And I think it is also showcasing the momentum which is there, and hopefully also allowing, say, the co-living industry to benefit from this, the momentum and opportunity. So when you're going to the next slide, we are basically talking about inclusive housing models. And what is important with tokenization is that at the end of the day, it allows much more participants to engage or to participate in projects. And that can be financial, but it can also be non-financial. It can also be that tokens represent some kind of a membership, some kind of a special perk. It shouldn't be only financial, obviously, that's the core, but you can also add, I would say, non-financial perks to the token, which at the end of the day gives a much bigger participation of a local community in a specific project. We have been discussing with Portio a specific project in Serbia, in a very exotic place, which is really all about community support to bring a affordable housing project to life. And this is just one example. We believe many others that will start to see the light. And having tokens with value and having the ability to distribute them in a very transparent and secure way on a 24/7 basis, it's really a very powerful mechanism. And what is also important is obviously that there is a more, I would say, equally spread way of governing projects. These projects typically by DAOs, so this distributed autonomy authority organizations. It allows people to have an equal vote in the way projects are handled, the way projects are managed, which is also very different to, let's say, real estate management the old-fashioned way. So if we go to the next slide, that's having that say in the way projects are managed. I think it's also a very powerful benefit of tokenizing real estate. The big promise for us when we are talking about co-living is obviously the opportunity you bring to the larger public to really become a co-owner of a project, basically by just engaging with the project and investing, I would say, relatively small amounts up to everyone's resources. Tokenization just brings the opportunity to a much larger public. It lowers the financial thresholds, and it really fosters this co-ownership of projects. And I think that is one of the biggest assets tokenization has, and which it blends very well with co-living and shared living, all this, I would say, arising hybrid living forms. I think there is a great match in both dynamics. Next. So the fact that tokenization brings the opportunity to a larger audience obviously also creates a dynamic in the market for operators, for developers, for property owners to basically use the community as an alternative way of financing, which at the end of the day results in a larger amount of co-living spaces being available on the market. So co-living, tokenization itself just also allows the market to expand in a sustainable way, and basically resulting in a large footprint of co-living and shared living projects across the world. So I think that's also one of the ways tokenization makes really brings makes a big step forward towards inclusive housing models. Next. The way we are doing it, next one with Portio, is obviously, yes, we are focusing on this really vast majority of, I would say, Gen Zs and millennials who want to become owners of a house, but for whom it is really difficult to get that actually done because of the current state of pricing. And what we also obviously see is that this generation also wants to have a little bit of has a different taste in which type of project to support. There must be a reasonable degree of, say, resonating with their own values. And I think the offering we are putting on the table is, I would say, ticking these boxes. When we go to the next slide, we see that what we basically do with our platform is that we allow people to co-own and co-invest into co-living real estate. Basically, these tokens represent a share in the real estate project, generating revenues. So everyone participating gets their share of the income the project generates. And one way we are, let's say, doing things a little bit more different than other platforms is that we really want to push the we call it invest as you rent model to the projects, basically meaning that people can top up their rental with a small amount on a monthly basis of an additional payment, or it can even be replaced. It can even be replacing a certain part of the rental to become co-owner. So that's also a way of, I would say, like steady growing your real estate portfolio with projects that you actually know because you're using them or they resonate with you. And I think the invest as you rent premise is something we really feel being quite powerful. In the discussion we got now with several operators, I think it is tapping into a need. The next slide. When we're talking about the values we are offering for operators and investors, obviously for operators it's clear they get access to, I would say, an alternative way of funding. We also firmly believe that when your tenants become co-owners, they start to use the property they're living in a different way, which much more respectful, which should also lead in a way to an important cost reduction. And as I mentioned earlier, you can also add non-financial benefits to these tokens. You can potentially tie them into your co-living network. And that's really creating possibilities on how to market how to engage with your audience and to really increase the, I would say, lifetime value of your tenants in a sustainable way. As Michael already mentioned, towards investors, we firmly believe that co-living is it's a growing market opportunity with, I would say, above market returns in a sustainable way. And obviously, by participating in this economy and these projects, you also somehow create an impact by making the housing opportunity affordable to a larger public. Next one. To give a little bit of an update on where we are with Portio Capital, we have been really working hard the last couple of months. We are at this moment wrapping up the Startup Bootcamp Accelerator program, which will culminate in us participating in the one of the biggest tech conferences next week in Holland, the Next Web, where we're going to showcase our project. We are gearing up for two big partner announcements. One of them on the technology side, the other one on the co-living operator side of things. Feel free to follow our socials because we will be showcasing these partnerships during the next 2 or 3 weeks. And I also would like to use the opportunity to reach out to Co-Living Conference, to mention the conference. It's Europe's leading co-living event, I would say. It's the event where I would say the industry stakeholders are really gathering. The level of the panels has been at a very professional level. We got last year over 250 people attending. The target is to do this year. This event will take place at the end of September in Amsterdam again. And obviously we will be participating as well with Portio. And we hope to see some of the people in the audience here also in Amsterdam end of September. I think we can now move to the Q&A session. Yep. So feel free to usher your questions. We're happy to answer them to the extent we can.
Thank you, Pascal. Thank you, Michael, again for sharing this insightful information about the market trends and the evolution of the co-living industry. And I would like to hear from participants any questions that they might have regarding what has been discussed today here. If you can share your camera to see you all, to see some faces here. We have a question from Alvaro asking, how liquid are the investments?
At the end of the day, that's the holy grail of tokenization and the whole promise about real estate tokenization. So there has been already interesting projects and interesting evidence in the US about platforms that they managed to bring liquidity to the assets and basically allowing people to step in and step out on a relatively short term. And that's obviously also what we want to achieve with our own marketplace. And for doing that, we are basically preparing an important partnership with a tech provider who has an existing investor community backing the project, which will ensure the liquidity of the project. So how do we ensure it? It's about having the ability to gather, to build a community, and to make sure that there is indeed enough enough transaction volume on the marketplace, and that really is all about bringing a community together of people that believe in the real estate tokenization as such, and more specifically then also in the projects which are being offered on the marketplace.
And can I just also add to that? I don't see right now, there's not a tremendous amount of liquidity, but with tokenization, there's more liquidity than you have with the deals that I did, in 2019 and 2020. So those deals have no liquidity. These will at least have liquidity options. The other thing is that most of these projects, there's never going to be the type of trading and the type of trading volume like there is with Bitcoin or a NASDAQ stock or a FTSE stock. So because if you look at the amount of publicly traded companies in the pink sheets, the smaller deal size, those don't really have a tremendous amount of liquidity and don't trade that much either. But if the deal is a good deal, most of the time there's not going to be a tremendous amount of liquidity. I can tell you that with the realty deals, they're trading on Uniswap, and they also have a DeFi integration with Ava. And so the realty deals have liquidity and they are trading. So it really depends on, where some of the deals are. And as Pascal pointed out, the investor community. So the liquidity right now is potentially Uniswap, and then there's another. I'm blanking on, but Dennis has a liquidity protocol called Ocean Point, and there's a number of ATSs out there where these tokens will be able to be traded in the secondary market. Question to Michael: which asset class and living mix is sub-asset class has real estate tokenization? The asset class that I've seen the most is single family houses, and next would be residential, but not large projects, smaller projects. But the ones that have had the most traction is investing in single family houses. And I believe the reason for that is that most people in the world have experience with what a single family house looks like, and what it looks like to rent that out. So that's gotten the most traction. But I think the next wave is going to come in with multifamily and projects that address housing capacity, especially like Portio is doing with the co-living part of it. Because if you can address a housing need, and you could also address the ability for people to get equity in housing, you get a double benefit there for society.
Thank you, Michael. And we have another question from Amy. We are in the process of building tokenized, fractionalized, solar-powered tiny homes in Colorado for gig workers. Actually, this is not a question.
I can ask another question.
Yes, Javier, go for it.
Well, hello, Andrea. I'm Pascal. It's been a while. Nice to see you here. Yes, I just had sorry, I came a bit late, but I wanted to throw in a question anyways. Sorry if there's a bit of noise. When it comes to implementing blockchain and tokenization, are you aiming at establishing relationships with up and coming new co-living projects, or trying to establish collaborations with co-livings that are already existent? I would presume it would be easier to start with new projects, but also there's an opportunity with the ones who do exist.
It's a good question. Thanks for asking, Javier. At this moment, first of all, I want to make it clear that we are, as a platform operator, we are independent of any operator itself. So we don't have any, I would say, we will work with different operators depending on the type of product, depending on the regions. So we will work with different parties. Second, we will never do the operational side of things ourselves. So we're always working with third parties, because running a co-living business is a special skill. That's not our focus, not our ability. But when it comes to the type of projects we are looking at this moment, we are more focused on to work with operators or with co-living owners that have already a certain track record, that have already a certain ability in the market, because it's just a matter of risk mitigation. Yeah. And obviously, we will also screen, I would say, very new projects with new players in the market. But at this moment, when we are looking at from a project point of view, we are favoring projects with existing parties that have already some track record and I would say a credibility built up. And this is just because at the end of the day, we are marketing and offering an investment product. So from that point of view, in terms of risk mitigation, we feel that this is the secure way to go in the start.
All right, thank you for answering. I do have another one in case I still have the opportunity.
Still have some
when
time?
it comes to when it comes to implementing tokenization, is there a greater opportunity to do that in urban areas, or are we also talking about rural areas? I mean, we have housing problems everywhere, but are you prioritizing any of those two first?
We don't have a specific prioritization in terms of the location. It's more for us at this moment, so it can be both. It's really about working together with people that we feel that have the requested trust level, and if that is for a project with a more rural character, that can definitely be part of our let's say the first tier of project we're going to use in our when launching. It's about the project itself when it becomes reality, and it's who behind the project. That's for us at this moment. These are the main criteria. We are focusing geographically with Portio for our launch on Spain and Portugal, but within that, let's say those two regions, we are looking at both rural and urban projects.
I assume, though, that the urban projects might perform a little bit better, correct, Pascal, because of the density and the demand?
Yes, but on the other hand, I think some of the rural projects are from I would say, from a financial point of view, also really interesting, because these are like more experience-driven projects, which also potentially have a little bit more of a premium pricing. So it's not only it really can, you can also have interesting and valuable financial projects in with rural context. It really depends, I would say, from the location, and honestly also from who is behind and who is really driving the community, who is making it all work, and who is connecting the dots from the community point of view.
Interesting. Interesting. And so with the rural, it's more of a lifestyle living experience, and with the urban, it's more of a housing address.
Yes.
Like a housing solution, I would say too.
Yeah. Yes.
Yeah.
Yes. Yeah.
Yeah. Yeah, great point on what you just said about how rural could be more of a, the lifestyle, the experience. I'm not sure I would call it a premium experience, but it's definitely like a more wholesome, and urban areas is more has to do more with the decision that you want to live there and want to find a way to live there economically, and also have some like network support and the services that come along with the co-living. But yeah, I should say, by the way, I just came from a pilot program that was run in Spain for remote workers and digital nomads in the Northeast area. They are considering bringing remote workers to that area, and they're finding ways to create that initial movement and snowballing. I mean, there are many problems related to the housing. That was kind of the core of our conclusions. And another one was the importance of this sort of facilitator roles, much like Andrea might have done in the past in several co-living projects, or in Anseo itself. Roles like that are gonna have like a key importance everywhere, both in urban co-livings and rural, and also associated with public institutions that might act as connectors between remote workers and the locals. There are many opportunities to work in that direction. So I just wanted to point that out.
Thank you, Javier. I could tell you, I always learn something from Pascal every time I talk with him. So Daniel, you had a question?
Thank you, Javier.
Yes, thanks a lot, Michael and Pascal, for sharing those insights. I think it's very exciting, the time that we're in right now. You mentioned you focus, Pascal, with Portio right now on Spain and Portugal for initial projects. Can you say a little bit about the size of project that you're initially most interested in, or how big the community in a specific project could be or should be? And
We
then,
feel, yeah.
And the second part would be, one is the tokenization of the physical, the property, the asset, but then with regard to the community, what kind of services or experiences do you see being important for the community members when you speak with the operators or when you speak with digital nomads? What do people want?
Yeah. Thanks for asking, and thanks for joining, Daniel. Good to see you
Big
back.
pleasure.
In terms of size, we believe that from a, I would say, financial performance point of view, it should be, let's say, between the 30 and the 80 to 100 capacity. So that's let's say the range we are talking to. We feel that smaller projects, which really like just a very limited number of units, it can be a challenge to make it financially worthwhile. So we are typically looking at projects, let's say, from 25 on the bottom to potentially 100. That's the size we are looking at. If you go over the 100, then obviously you come into more difficult situations when you talk about community, because it's more difficult to make a community with a large number of people. That's also what you hear from, I mean, people who are actually living in this project, that for sure the community vibe, the community feel is more developed with, I would say, smaller scale projects. And I think therefore for us at this moment, also as we are starting, let's say that we are in the 30 to 50 to 60 part. When we are thinking about the experience, I I think it's really about giving the people the ability to connect with each other in a way that it's really human. So because there is plenty of digital tools to do that, but Coliving is just about doing it in a very humanized way. It's about people that really want to share some of their experiences. They want to potentially work together on some projects together, and it's finding the balance in I would say life work. It's like really fostering that well-being, and to that extent, smaller projects are potentially further developed in how they deal with it, because they can obviously focus more on the individual level than if you're operating a very large-scale project. But when we are talking to operators, it's really about connecting the people in a human, physical way, make them work together or do things together, and yeah, it's much more than just making sure they get a certain degree of amenities. I think it's more of there is also a big emphasis on the personal well-being, on the mental side of things. That's why people are joining this type of co-living projects, and that's also why it's important that they understand where they're going to end up to. So there's obviously for us as a operator, as a marketplace operator, a role to play there to do a good curation of the type of project.
Excellent, thanks. So with regard to the community, you could say it's about people look for maybe an extended family who to share a lot of experiences with, while making sure there is a good balance between work, play, health, and yeah, making sure that that life feels good in the end.
Yeah.
Is that one of the reasons maybe people look for this new kind of experience?
Yes, and that's, I think, to be honest, it's more important than the technical amenities which are offered. They are also important for sure, but I think that humanized side of things is also very important, and there's a very important pillar of the whole co-living and shared living concept anyway.
I agree. For me, that's also something that is really important. So thanks a lot for sharing that.
You're welcome.
Thank you so much. We have 5 minutes left. If there is any other question, please raise your hand and come in the spotlight. If not, we would like to share, not last but not least, our contacts and where you can learn more. So please take your time to scan this QR code, because there you can join our online community where we share updates with where we are at right now, and when we're going to launch the first project to be the first one that are going to be announced. So yes, please scan this QR code now. Also, you could go on our socials. On LinkedIn, you can find us under this name, Portio Capital, on X, and on our website. And there's something else to share, Pascal?
No, I would like to thank everyone for joining, and I also would like to thank Michael for your support in putting this all together. It's really, I think it was very content-wise very powerful, the part on tokenization as such. So thanks for your help, and also thank you, Andrea, for doing all things together and connecting the dots.
Of course. And the last thing is that this webinar was recorded, and everyone participating today is going to receive via email this recording with the transcript and also the presentation and all the information we discussed here today. And of course, you all the time can reach out to us via, you can find us everywhere, email, social media. We will be prompt and answer to your questions. Okay.
Thanks a lot.
That's it.
Thank
Thank you so much.
Thank
Thank you
you.
very
Have a great
much.
day.
Good day.
See you next time.
Bye-bye.